Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 21st, 2025, and we're diving into the latest earnings report from Super High, a leading Chinese cuisine restaurant brand known for its Haidilao hot pot restaurants. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Super High has just released its unaudited financial results for the first quarter of 2025, and there's a lot to unpack, from revenue growth to strategic initiatives.
Revenue and profitability overview. Let's start with the top line. Super High reported a revenue of $197.8 million for the first quarter of 2025, marking a 5.4% increase from the same period last year. John, what are the key drivers behind this growth?
The revenue growth is primarily driven by the expansion of their restaurant network and increased guest visits. They opened 4 new Haidilao restaurants while closing 3 underperforming ones, which helped optimize their operations. Additionally, the delivery business saw a significant boost, with revenue increasing by 37.9% year over year.
Despite the revenue growth, the income from operation margin decreased to 4.1% from 6.6% last year. What factors contributed to this decline?
The decline in the operation margin is mainly due to increased investments in customer and employee benefit initiatives, as well as higher outsourcing service fees and lease payments. These investments are part of their long-term strategy to enhance customer satisfaction and employee loyalty.
Operational efficiencies and future outlook. Super High's operational metrics also show some interesting trends. The table turnover rate remains steady at 3.9 times per day, and guest visits increased by 6.8% year over year. How is the company leveraging these metrics for future growth?
Super High is focusing on customer-centric initiatives, such as rational pricing strategies and enhancing portion value to strengthen customer loyalty. CEO Yang Lijuan emphasized their commitment to these long-term investments despite short-term margin pressures. Looking forward, they plan to build a different Haidilao by enhancing product offerings and restaurant design to capture more market share.
Financial position and cash flow. Turning to the financial position, Super High reported net cash from operating activities of $19.7 million and ended the quarter with $204.9 million in cash and equivalents. How does this position them for future investments?
With a strong cash position and net assets of $367.8 million, Super High is well equipped to continue its strategic investments in expanding its restaurant network and enhancing customer experience. The net profit of $11.9 million, compared to a loss last year, also indicates improved financial health, allowing them to reinvest in growth opportunities.
Key takeaways. In summary, Super High has shown solid revenue growth and a return to profitability in the first quarter of 2025. Their focus on customer-centric strategies and operational efficiencies positions them well for future growth. John, any final thoughts?
Super High's strategic initiatives and strong financial position suggest a positive outlook. Their commitment to enhancing customer experience and expanding their market presence will likely drive continued success.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Super High's performance in the comments below.